Welcome to Profit and Prosper, a podcast for entrepreneurs who are ready to make some money while doing what they love. On this podcast, we're going to pull back the curtain and talk about all things business and money. But I promise you, this is not your typical boring numbers talk. I'm your host, Sarah Young, a CPA and CFO with over a decade of experience in finance, business, and leadership. I'm going to share everything I've learned from helping my clients grow more profitable businesses and keep more of what they earn while growing my own successful business along the way. You'll feel empowered and confident that you too can grow your wealth, live a rich life, and have an impact. Stick with me and you might even start to think that finance is fun. Let's dive in. Welcome back to our series on how to turn your business's cash flow into wealth. Tell me if you have ever had a thought in your head along these lines. One day, when I make more money in my business, then I will become wealthy. This thought, I think some version of that is really common amongst a lot of us business owners because I know that many of us are perfectionists. I'm a perfectionist. Many of my clients are that way too. And I don't know if it's just a personality trait that makes a lot of us, want to become entrepreneurs, but we tend to think about doing things perfectly as opposed to just freaking doing the thing. And so I want to talk about how this relates back to building wealth in your business. The reason I wanted to talk about this is that I see a ton of business owners procrastinating on doing the things that they need to do to build wealth. They think, I'll figure it out later. My business is my retirement, whatever that means. Their business is their retirement, but they're not producing cash flow. Their business is their retirement, but they have no plans for how they're going to sell it and actually turn it into their retirement. They're just floating along day by day because we get so busy, caught up in doing the day-to-day work that we don't actually take the time to step back and think, well, what is our plan and how are we actually going to retire or relax early? And we also tend to think that when we get to the next income level in our business, suddenly things are going to work out. If we're not cash flowing at whatever our level is now, we just need to make more sales and magically we're going to cash flow. But what you fail to realize is that your habits, your money habits that you have right now in your business are not going to suddenly change when you bring more sales in the door. So if you are the type of person who tends to spend a lot of money, all you're going to do when you have more sales is continue to spend a lot of money unless you address the underlying habits. On the flip side, if you are the type of person who tends to hold on to your money, I see a lot of business owners who let cash pile up in their accounts because they're afraid to take it out. When you get more cash in your account, do you suddenly think there's a level where your brain is going to tell you that it's okay to take that money out unless you purposely change it? The answer is no. And so here's the short version of this episode. You do not need a 7-figure business to build wealth. You do not need to get to the next income level in your business to build wealth. Now, if you have solid financial habits and you make more money, will you build your wealth faster? Yes, absolutely. But it is not required. And so do not wait until you get to the next income level in your business to start implementing the things you need to actually build wealth. So I want to talk about this idea of perfectionist fantasies and how that impacts your business. I first heard about the idea of the perfectionist fantasy by listening to a podcast hosted by Kara Loewentheil, who is a life coach, and her podcast is called Unfuck Your Brain. It is episode 171. This was one of her greatest hits episodes. I think it's greatest hit number 1. And the episode title is Perfectionist Fantasies and Tomorrow Thinking. in this episode, she's not specifically talking to business owners. She is talking to people in general, but she's talking to many of us who have perfectionist fantasies. And given that this is her number one most popular episode, I'm thinking this is a lot of us. When I listened to this episode, I mean, it must have been at least a year ago. Honestly, y'all, my mind was blown. I had to go back and listen to it again. I took extensive notes, and I think about how this is impacting my business and my clients' business all the time. So I'm going to summarize, but I really strongly recommend you go listen to that episode. I'm going to summarize what I wrote down in my notes that struck me. Perfectionist fantasies are you thinking that if you're perfect in some area of your life, you will finally be happy. You justify these fantasies in your head and you make them seem reasonable, and you create these elaborate plans that will start tomorrow and will be done perfectly in your head. You get a dopamine hit from imagining how perfect it's going to be, and you feel really good about yourself. And then what happens the next day? You start your elaborate plan and you fail. Or you don't start at all because honestly, the plan that you put in your head was so elaborate it was impossible for you to execute on. And when you fail, you are highly critical of yourself. You withhold any positive feedback from yourself until you achieve perfection, which never happens. And you make yourself feel better by coming up with yet another perfectionist fantasy. The consequences are you lose integrity with yourself because you think to yourself, well, I never do the things I think I'm going to do. And so you don't ever believe yourself. But the only way to feel better is to come up with another perfectionist fantasy. And it becomes impossible for you to actually do anything in the reality that is today. And so the antidote, she says in the episode, is achieving a consistent minimum baseline of activities. And I know you might have heard some of the previous episodes where I talk about a baseline revenue. And I must have come up with this after listening to this episode, or must have been in my brain. I didn't, until I went back and read my notes on this podcast episode for prepping for this podcast episode, I was like, oh, that's where I got the idea from. So I'm giving credit here. Go listen to the podcast episode 171 for real. Go do it. We'll link it in the show notes. She has no idea who I am, by the way. I just think her podcast is amazing. So the antidote is achieving a consistent minimum baseline, which means what are the daily habits, the small steps that you can implement to take little steps, little by little, to get you to your goal. The book Atomic Habits is one of my favorite books that I like to recommend to all business owners because it also talks about how do you implement these small daily habits. So if you have not read that book, I highly, highly recommend that one. And these really small steps, your brain is going to tell you that they are stupid and pointless and that they are not enough and that what you're doing is not enough. But if you do these small steps consistently, it actually is. So here's what I'm talking about: perfectionist fantasies and the idea of a minimum baseline as it relates to building wealth. Because I have said in the last episode and at the start of this episode that you building wealth comes down to your daily and weekly financial and money management habits. It comes down to what do you need to do to generate cash flow in your business, and then turn around and allocate some of that cash flow to your investments to build up your net worth, right? So it's all about, honestly, how you allocate your money more so than how much you have coming in, really. You do not need a 7-figure business to be a wealthy person. If you're enjoying my podcast, then you are going to love my exclusive weekly email series, Profit and Prosper Millionaire Mondays. As a business owner, you have limitless potential for the amount of cash flow you can create in your business, but your journey to building wealth might not feel all that straightforward. To convert your cash flow into real wealth, you need to do a bit of planning and strategizing so that you can be wealthy and be well. reaching financial independence, and eventually retiring or relaxing early at your lake house, which is my plan. In my Millionaire Mondays email series, I share tactics and strategies for using your business to generate your first $1 million in net worth in the same approachable way that you get in the podcast. Sign up for my exclusive emails for free at profitandprosper.co/millionaire. I want to do an exercise quickly of what could this look like on a business doing $20K a month in sales. And the reason I do 20 instead of 10 is I honestly believe that these numbers are a lot easier to work at $20K a month. You've heard potentially previous podcast episodes. I think it was episode 3 where I talked about how I found that my life actually got easier and my business got easier when I got past 10K a month. I think we have glorified this idea of 100K, 6 figures, 10K a month for so long, but I actually truly believe that things will be easier for you if you can figure out a formula to get to 20K a month or about $250 in annual revenue. For the reasons that I outlined in episode 3, I think. The episode title was How I Use My Profit Strategy to Blast Past 10K Months. And I talked about the things I did to get there and make it easy. So let's do an exercise on 20K a month in sales. And this is not to say, again, that the numbers don't work on 10K a month or less, but I think that it's easier. 10K a month, I find the level of owner pay that you're able to take out works better if you have a partner, meaning like you have shared personal finances and you're not relying solely on your income to make all of this work. But this will be a whole other episode. I think any woman, any person really running their own business, I want you to be financially independent regardless of your partner. I want us all to have our own money, okay? So I'm going to do this exercise on 20K a month in sales. Let's say hypothetically that you spend 40% of your sales on expenses. That is $8,000 per month. Let's say you also have to put 15% aside for taxes. So that works out to be about $3,000, 15% of your sales. It ends up being about 25% of your profit, or 20K minus 8K in expense leaves you with 12K profit. 3,000 going to taxes is 25% of 12. Okay. I know I just threw a lot of numbers at you. Write it down if it helps you. So 20,000 a month in sales, 8,000 on overhead expenses. This would include business expenses. So hiring your team, contractors, any marketing expense, software subscriptions, office expense. I think you can actually do a lot on $8,000 a month if you are smart about what is your consistent monthly baseline revenue and what are the activities that you need to do that. If you focus on those activities, I think you can do a lot on $8,000 a month. So after you pay your expenses and your taxes, you are left with $9,000. How do you allocate that $9,000? Let's say hypothetically you take 5K to cover your personal expense budget, which I find is a starting point for a lot of people. It's a nice round number. And I think, with my husband, our personal budget right now, including health insurance, which is $900 a month, including childcare, which is over $1,000 a month for part-time daycare. Childcare is crazy expensive, y'all. Including our housing and food, which I am not cheap on food. Our total monthly budget is about $11,000. And so my pay goal is $5,500 to cover our basic necessities, and then he pays for half too. So I think 5K is pretty reasonable for many people. Obviously, everybody has their own situation, so you can do your own math. So in this example, you have 9,000 left over. You take 5 for your personal expenses. That leaves you with 4. How do you split the remaining 4? Remember in the previous episode, we talked about make sure you build up your reserves, make sure you build up your tax savings account, which we've already accounted for taxes, right? So I would split the remaining 4 between your business profit savings and your investments. I like for businesses to target 10% in profit. So 10% of sales in profit in this example would be $2,000. So we're going to take $2,000 and take this and use it to build up our reserves, use it to fund any other investments you need in your business. And that leaves you $2,000 to invest. Okay. So $2,000 a month to invest. Let's say you invest this in an S&P 500 index fund. An example, go Google it, is FXAIX. This is the Fidelity S&P 500 index fund. I have a good chunk of my stuff invested in this one, among other index funds. There will be a corresponding one at Vanguard, wherever you have your retirement accounts and brokerage accounts. If we look at the average annual rate of return on the S&P 500, so just to back up, the S&P 500 is a portion of the stock market. It generally is a measure of how the economy, how business as a whole is performing. And an index fund is where they buy a prorated portion of all of the businesses on the stock exchange. And so as one business becomes more valuable in terms of its stock price, the index fund will invest more into that stock. As it goes down, as the value of that business goes down, it invests less in that stock and more in other businesses. The reason index funds are great is the only way they will ever entirely lose value is if the United States economy completely shuts down. And in that case, I think we have bigger problems to worry about than our stock portfolios, okay? Because if one business's value declines, the index fund will just buy more of other businesses that are doing better, okay? So we all like index funds. Look into them, go research them, read about them online. They're really great investment options, all right? So looking over the long term, like the last 20, 30, 40, 50 years, right? And that's typically when we think about investing in the stock market, you want to invest for the long term. Invest for retirement. Don't invest to make money in the next 6 months. That's called day trading. And I generally don't recommend that because studies show that even hedge fund managers who are paid literally millions of dollars a year to day trade, essentially, do not consistently beat the market, okay? And so if they can't do it, the odds are you can't do it, and your time and money is going to be better invested elsewhere. Okay, off the soapbox. If you look at the long-term return on the S&P 500, you're looking at, on average, a 10% annual rate of return. And yes, I said that correctly, 10% annually. Right now, as I'm recording this, it is the end of May, and the stock market recently has tanked, and it is causing a lot of anxiety in people, but you have to have a long-term vision, okay? Long-term, it is going to increase again. The stock market is always going up and down, but when you zoom out and look at the graph of the chart, generally, it has an upward trajectory of 10% a year. If you take out normal inflation, and again, I also realize inflation has been higher than normal, but normal inflation, if we look back at the history of the United States, is generally 2 to 3%. So if we take out 3% inflation, our 10% annual rate of return will net us 7%. So a 7% rate of return, okay? If you take your $2,000 per month and invest it into an S&P 500 index fund like FXAIX every month for 20 years, at the end of the 20 years, you will have about $1,049,931. I got this math by doing an online investment rate of return calculator, okay? $2,000 a month every month for 20 years, you will have a little over $1 million in the bank. So if you're 30 right now, do this, you'll have $1 million by the time you're 50. That doesn't include anything else that you do with your business profit savings, with your pay, right? This is just off of that $2,000 per month investment allocation. If you're 35, you'll have $1 million by the time you're 55. If you're 40, you'll have it by the time you're 60, okay? Point being, 20 years, the clock starts when you put that first money in and then do it consistently over time, okay? One other little seed I want to plant is this. if your business is generating the profit levels that I just did in my example, you are generating profit, which is sales minus business expenses of $12,000 a month. So in our example, that was 20K sales, 8K in overhead expenses is $12,000 a month, which is $144,000 per year. That is an asset that has value. An asset is anything that produces cash flow for you. That business is producing cash flow, therefore it is an asset. And something that I think a lot of business owners, especially women business owners, don't tend to think about is you can sell your business. People will pay you to buy the asset that you have created that generates cash flow. So if you have a business generating 12K a month in profit or 144 per year, if you sell it, the sales price is generally based on a multiple of that profit. Generally, it depends on the industry. It could be as low as 2. It could be, I've seen multiples of 7 with a client I had a couple years ago sell. Let's say the multiple is 3 to 4, which is pretty reasonable for a lot of industries. If your profit is 144, then your sales price is going to be anywhere from $450,000 to $550,000, y'all. Okay. So not only have you created a business that you have used to invest along the way into other income streams like a retirement account, you also have an asset that you can sell that generates money, right? It all comes down to how you allocate your cash flow, okay? So back to the steps, the 2 basic steps to generating wealth: create a business that generates a profit, take some of those profits and invest it regularly. So you might be looking at me and saying, you know what, 20 years sounds great, but how do I do it faster? Which is a great question. So I personally, I've said this before, I'm 35. I want to have $2.5 million in net assets by the time I'm 45, which I honestly think is pretty doable. Right now, if I added my business, my husband and I are probably just under $1 million. And I think that $2.5 million is my net asset number where I would be comfortable scaling back on my income that I receive every year and not actively investing a ton anymore. Although, because I like to work, I'll probably continue to work. If I have extra money, I will just use that to invest more. Okay. So if you want to make more money faster, you want to build your wealth faster, you can invest more money or you can invest earlier. Okay. So there's this principle called time value of money, compounding interest. You might have heard people talk about this, but the idea of compounding interest is you put money into investments and it earns interest. And then over time, that interest earns more interest, which earns more interest. It all compounds on itself. So when you put money into investments that generate earnings and you keep those earnings invested, you don't take them out, then those earnings also make you more earnings. And the growth chart, if you plot out, your monthly investments, your principal is what I'll call that, plus your earnings, it's not linear. Even though you're just putting in 2K, 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 2K every month, your actual investment value is exponential because of the principle of compound interest. The earlier you do this, the more money you are going to get, which is why if you can, start investing now, even if it's like $50 a month, y'all. Even if you can spare $50 a month to start investing, I think it is probably worthwhile just to, 1, build the habit, and 2, to start to take advantage of compound interest. So I actually have a book here, and I'm going to read some of this to illustrate the idea of compound interest. So the book is called The Psychology of Money by Morgan Housel. This is not written for finance people. So I do recommend that you read this book. I think it's really interesting. He looks at the behaviors and stories of people who have built wealth, who have lost wealth. What are the habits that they do, that they have. The excerpt I'm going to read is talking about Warren Buffett, who is generally accepted as one of the most successful investors ever. He is a billionaire in the terms of like $85 billion almost when this book was written. And, He is widely regarded as very successful, right? And I want to use his story that he talks about in this book to illustrate the idea of compound interest. So, as I write this, he wrote this book in 2019, 2020. As I write this, Warren Buffett's net worth is $84.5 billion. Of that, $84.2 billion was accumulated after his 50th birthday. And I think Warren Buffett is like in his 80s now. 81.5 billion came after he qualified for Social Security in his mid-60s. Warren Buffett started investing when he was like 10. And he started investing, early. By the time he was 30, he had a net worth of $1 million or 9.3 million adjusted for inflation. So obviously he started early. But the point is that having that investment earlier eventually compounded so that over time he had insane rates of return on his investments. So then he says, let's consider a little thought experiment. What if he was a more normal person, spending his teens and 20s exploring the world and finding his passion, and by age 30, his net worth was $25,000, way more normal. Let's say he still went on to earn the extraordinary annual returns he's been able to generate, which is 22% annually, obviously way higher than the 10% that I've quoted earlier, but quit investing and retired at age 60 to play golf and spend time with his grandkids. What would a rough estimate of his net worth be today? Not 84.5 billion. It would be 11.9 million. 99.9% less than his actual net worth. Effectively, all of Warren Buffett's financial success can be tied to the financial base he built in his pubescent years and the longevity he maintained in his geriatric years. His skill is investing, but his secret is time. And so I don't use that as an example to glorify billionaires, and I don't use that as an example to discourage you if you have not, put $1 million in the bank by the time you're 30. I mean, I certainly haven't. So I use it as an example of the power of compounding interest. And so by relative terms, right, Warren Buffett had $1 million in the bank when he was 30. And then by the time he was geriatric, he had $84.5 billion. If you translate that down into a $2 million net worth, right? So percentage-wise, how much he earned after his retirement years just by factor of time in the market, if you translate it down to 2 million net worth, I did the math, 96% was earned after retirement. And so that would be 1.9 out of $2 million. So the point is, start now if you can. So go back to the last episode where I talked about what are the 3 stages of building wealth? What are the things that you need to do? And how can you get started now? And let's talk quickly about how do you invest more or how do you invest earlier? Because those are 2 questions I think a lot of people have. Again, going back to Perfectionist Fantasies, we want to build wealth and we want to be millionaires as quickly as possible, ignoring the fact that to do that, you have to start investing now or as soon as you can. And if building your net worth means you're paying down debt, you are also making progress, okay? I talked sort of in the last episode about the steps of building up your reserves, paying down your high interest debt, and investing, right? You don't need to do all of those things at one time. I think doing any of those things now is better than doing none of those things, okay? So how do you invest more? You make more money. If you want to invest more than $2,000 a month, you can cut back on your spending, of course. So instead of paying yourself $5,000, you pay yourself $3,000 and you invest the extra $2,000 on top of the $2,000 that you already have, right? So that's one option. I think a lot of people focus on frugality as the answer to solving all of our wealth problems. And I honestly, truly believe that being frugal and living small is just another way to keep us down, like truly. And no offense to you, like if you are a person who leads a simple life, do that. I think there's a difference in focusing on how do I spend as little as possible versus how do I make more money and have more impact and more power, right? Power in a good way, okay? So you can invest more money and build your wealth faster by making more money. Many of you need to create a profit plan for yourselves, meaning how are you going to make money in an easy, repeatable, scalable way? If you go back to the last episode, this is where we were talking about the stabilizing phase. How do you create a consistent monthly income? How do you execute that formula? And then once you stabilize, how do you protect that? By removing yourself from the equation, by building up your reserves, right? If you can figure that out, you will be set up to grow and scale your business a lot more easily. You can also get wealthy faster by investing earlier, going back to the compound interest example. So if you want to start now, number one, decide what are you going to invest in? The simplest way to start is probably just to get a traditional or a Roth IRA. It's tax advantaged, so that's great. And just open an account at Fidelity or Vanguard. It doesn't even have to be a business owner retirement plan like a SEP IRA or solo 401k. It can just be a traditional one for now, okay? Start putting money in there. I don't care if it's $50 a month or if it's $20 a month or $100 or $500 or whatever it is. Let's just start with building the habit. And going back to the perfectionist fantasies, you're going to think in your head, your brain is going to tell you, Sarah, $50 a month isn't enough. It's not enough. It's not going to get me there. But I'm going to tell you that you investing $50 a month for the rest of the year is going to get you farther ahead than waiting until you magically make more money in your business. Okay. So to recap, how do you build more wealth in your business? Generate cash flow and invest that cash flow into things that build your net worth. All right. Invest early. Start now. Sit down and listen to this episode and think, what are the next small steps I need to do? And go and do those in the next week, in the next month. I want you to actually go implement this, okay? So figure out what are the small steps you need to do. And if your brain is telling you, I don't have enough, I'm not going to be able to do this until one day my business makes more money, until I get to the next income level, I challenge you to think, what are the small steps I can implement to make it happen? All right. So I hope this episode was helpful. I want you to go and implement, go and take a step forward today, in the next day, in the next week. And I will see you next week where we will continue the conversation about how to turn your business's cash flow into wealth. Thanks for listening to this week's episode. Now, I want you to go take some action. What's one thing you can do this week to create more profit in your business? Send me a DM on Instagram at YoungCoCFO and share your action item with me. If you have a question or topic you'd like me to dive into, or if you're feeling empowered about taking charge of your finances, let's continue the conversation. Go to profitandprosper.co to submit a question or topic for me to talk about on the show. And because we all profit and prosper better with friends, please leave me a review on Apple Podcasts, subscribe wherever you listen, and share the episode. Make sure you tag me at YoungCoCFO on Instagram so I can give you some love, and I'll see you in the next episode.